Welcome, everyone, to Strategies for Success in Alternative Asset Investing. Here we go. I'm going to share my screen real quick. I'm going to run through these slides pretty quick, and me and Jack can talk about them, talk about a few of them. Like I said, Strategies for Successful Investing in Alternative Assets. I'm Charlie Wessel, joined by Jack Krupey. He's the principal at JKAM Investments. Jack, it's out of Costa Rica?
Puerto Rico.
Puerto Rico. I knew it was a Rico.
Yeah, all of our investments are in the mainland though, but I run the fund out of Puerto Rico.
Yeah. I kept saying Costa Rica and New Orleans as well. We just got back from New Orleans with a mastermind group that we're a member of. We've been members of it for years, haven't we, Jack? It's full of really, really great people doing really good deals in the alternative asset space. I'm Charlie Wessel, principal of Cordell Capital, founded the company in 2016. Cordell Capital, we provide these private investments to the everyday investor, accredited investor that usually doesn't know about these type of investment opportunities. We specialize in multifamily homes, commercial real estate, and right now we have a short-term rental fund that's going on right now that'll be should be really good. I got just over 100 million in assets under management. Jack Krupey has 20 years in real estate and distressed debt. We had a high yield private equity fund post 2008 and managed $3 billion with a B dollars in mortgage debt purchases from 15 to 19. He founded JK Asset Management to focus on multifamily real estate and launched 2 diversified funds that he runs right now. The importance of alternative asset investing. If you're seeing this video, you probably know the importance of it. Diversification, getting some of your money out from those financial advisors and putting them in some assets that we pretty much beat the pants off those guys, don't we, Krupey? Stable returns. These are all, buildings. They're, you go see them, touch them, feel them. These aren't, volatile stock market, investment strategies here. Income streams. These are all passive income opportunities that are either, monthly or quarterly distributions that we offer. Tax benefits from depreciation to cost segregation, bonus depreciation. There's just a ton of tax benefits, and real estate's just a great hedge against inflation with appreciation. All right, these are just 5 of the things that we're going to work through today. Understanding market cycles, leveraging debt wisely, vacation rental gold rush, diversification with assets, and then we're just going to kind of speed through those first 4 and really focus on the tax efficiency part of the program here. All right, Jack, so understanding market cycles, where do you think we're at in the market as far as upcoming deals that will be done here real soon? I feel like, go ahead.
Oh yeah, sorry to cut you off.
Go ahead, bud. Go ahead.
Yeah, I mean, it's just a really interesting time in the market right now, and I get a ton of questions. There's a ton of fear out there right now from investors. They'll see a headline on CNBC or one of the other news networks about real estate crashing or this or that, and when you look at each cycle, history may not repeat itself, but it does rhyme. And the residential side of the sector is not where I see issues going forward. The fact is 40% of homeowners roughly don't have a mortgage. There's so many baby boomers that just have their houses paid off and have 0 debt. and another roughly 30% is locked below 4%. So there's potentially a generation of homeowners that are going to be stuck in their houses where it doesn't make sense to sell, doesn't make sense to trade up, or even doesn't make sense to trade down, because if you have that 4,000 square foot house and your kids are out in college now, or in your empty nesters, what are you're gonna buy a condo for half the price, but it'll cost you the same amount if you have a mortgage. So the residential market, the lack of supply is good for the rest of the market. Now, multifamily, which is an area we're heavily in, is largely stable. We focus on value add assets where, regardless of if interest rates go up or down, if you have a solid value add business plan, you should be able to execute. With that said, the interest rates going up is putting a lot of pressure on commercial real estate. Those in multifamily with bridge loans, it's a lot of pressure. The office, the retail, some of these other sectors, that's where the major crises will be. And it's largely contained to sort of Wall Street and private equity funds. I don't see it as the type of contagion that will cause a 2008 type of crash.
No, I don't see the 2008 type of crash coming at all. Especially in multifamily. I think, the default rate, even in 2008 multifamily, was like 0.3%. And that's just almost average,
Yeah. And with that said, I mean, there's always distressed opportunities in any market. And, those of us that are full-time in the business, and, we both see opportunities crossing our desks, weekly, if not daily in some cases. Those that have to sell right now, that either didn't have enough capital raised or got into a bad bridge loan, those are really good opportunities right now. And those that have fixed rate debt, or those that structured their deal right to have that 3 to 5 years and that option not to be forced to sell, those people are just going to hold until we have some more clarity on where interest rates go longer term. So it's important to be partnered with groups that see a ton of deal flow and have the distressed or interesting opportunities coming across their desk.
absolutely. And I'm pretty sure that both me and you both have. I mean, our partners that are looking at deals that we bring capital to, I mean, they're in the well over $500 million mark in their assets under management. So we're looking, we're hitched to some pretty big horses.
Yeah, absolutely. The type of groups that sometimes get last look on a deal. It's not out of the question that some of our partners are not even the highest bid, but they have the confidence of the seller that they could actually close and actually execute on a transaction, and that's very, very important.
Absolutely. I know Lone Star Capital, they've gotten several deals that they weren't the highest bidder on just because they knew they could transact on. All right, so we'll move to leveraging debt wisely. We just kind of talked about this. I mean, personally, we didn't get into any bridge debt deals. I passed on all those. Some of the guys, the guys that we do partner with and bring money to, I mean, we still cherry pick their deals. We don't do every deal that they do, which is the good part about me and you, is that we can really cherry pick deals that guys bring to us. But yeah, I mean, leveraging debt wisely. I know that some of those bridge loan, structured deals, I mean, they really amp the returns on them. Especially the cash on cash, but we personally didn't get into any of those. I mean, what's your thought on leveraging?
Yeah, so my first fund is allocated in 30. We made 30 allocations, so we are in a few bridge loan deals. Even that we got into as early 2021, where we had a good part of the cycle, where there were situations where it made sense. We were careful with them, but a couple of the benefits of bridge were there's no prepayment penalties, and they did build in the construction budget, so you did get slightly higher leverage. So there were some efficiencies to it, and look, we've had an unprecedented increase in rates, so it's definitely put some pressure on some of those deals. Nothing we're worried about having a catastrophic issue. on, but unfortunately, a few of the deals have paused distributions because the rise of rates has eaten up all the cash flow. So,
Right.
kudos to you for managing to avoid, the volume of deal flow we had. We had a couple deals we had previously exited as well too. So we were in some bridge loans that we doubled our money on,
Oh
during
yeah.
the boom as well. So, we diversified even out of multifamily at late 2021. We started doing some light industrial, some self storage, and some other asset classes that had more conservative debt and weren't. I don't know that multifamily was in a true bubble, but there was definitely a point when rates were at zero and just residential market was just going absolutely crazy, that there was just a ton of competition for multifamily. So there were certainly many deals we passed on that were just had crazy prices that made no sense. But the entire market was red hot for until rates started moving up.
Oh yeah. No, a lot of people made a lot of money, including a lot of our investors, didn't they? All right. So vacation rental gold rush. I didn't know if you were part of Sam's deal or not. Are you bringing capital
So
to any of Sam's?
we're aware of it, and we just hadn't gotten fully involved yet, for not for any negative reason with it. We just we tend to be able to pick one deal a month, and we just seem to have other stuff going on. A multifamily deal, light industrial deal. So we're likely to get involved. We're certainly paying attention to that space, but and I like the space in general. We just only so many hours in a day, so we hadn't gotten as involved there. But I'd love to actually just hear your take on kind of what you think the benefits are, and what your take is on that asset class.
Yeah, for sure. It's we're a one horse pony show as well. I mean, I try to do one deal at a time. I mean, raising for more than that, it just takes away too much. It adds competition to our own opportunities. And so, anyways, yeah, we're raising capital for TechVestor right now. I mean, they raised over $40 million last year in this space, and they'll raise close to $100 million this year in this space. So they're really institutionalizing it. And I'll be honest with you, when I don't personally own any short-term rentals. I don't own any rentals at all, really. I mean, we had 6 rental houses, sold all that. That was a pain in the ass. But their team is really who we're betting on. We're betting on the jockey here. I mean, it also diversifies across so many different individual houses that it's a great diversification play, because you have a lot of these houses that are doing really well. It's almost like multifamily. You have a 300-unit apartment complex. The AC goes down in one of them. I don't need to hear about that. Just fix it. Kind of thing. I know they had they had a few exits already out of the first fund they started last year that were like a 42% IRR. Because they're selling these houses after they go in and renovate them. They're then selling them at a cap rate from the rental income as opposed to comps in the neighborhood. And they put it into practice, and it's working. Like, they're selling these houses off of cap rates already, even after the first year of doing it. And they have like a proprietary software that links to, because they're all tech geeks, man. These guys that started it came from the tech part of VRBO, the tech part of Airbnb, and so they're all software guys, man. That they put this software package together, links to the MLS. Within seconds, it runs a house through like a 150-point checklist, and can determine if it then moves it directly over to a human underwriter to underwrite. They can tie up a house within minutes of it hitting the damn MLS. So that's kind of why I'm backing them. It's not that I really want the discount on the house with the pool and the tennis court in the backyard in Arizona. I just think that these guys, they get their stuff together, man. They know what they're doing. And I've met them all. Super sharp group. Their work ethic is through the roof.
Yeah.
So, like I said, I mean, we bet on the jockey, man. you know?
Yeah, that's the important point. That's something very powerful you just said there. And you and I both, I mean, you own a successful business outside of this. You've owned rental properties. I owned a ton of rental properties in my 20s. And part of my origin story that I often tell is that, when I had that successful run on Wall Street, I was miserable. I got into real estate originally to try to have passive income and flexibility and financial freedom. And what I ended up with was, a Wall Street grind where, you got guilted for taking vacation days, and you'd had to show FaceTime in the office if you were done with what you could have been done with at 2 o'clock. You couldn't leave before 5 or 6. It looked bad. So, fortunately, I made a good amount of money and I got bought out. And when I was looking into this business, I made a conscious decision to, find the best operators and the best partners that could do it as good or better than I could do it. After, I'd spent years in an operationally intensive business, and get a lot of questions from investors. Why don't you just do it yourself? And like what you described there is, it's a group that, in that niche has the size and scale to do it better. And because they're working with guys like you and guys like me, they'll give a better deal for our investment community than they would often get going directly in. So we end up part of the deal, and we actually, can negotiate better terms because we're investing consistently with them and we're bringing larger dollar amounts. So it's a real benefit to the investment community. And that's what I try to advise any investor I talk with, that, often their first thought is, oh, I'm going to go buy an Airbnb. I'm going to go buy a single family house. And often you're creating a job you hate. And, take it from Charlie, take it from me, who've, owned businesses, owned a ton of rentals. We've done it ourselves. Often for most people, it's better to, join the right fund and the right syndicate and just be in with the winning horses or jockeys, like you said.
Absolutely, man. Absolutely. All right. So next, diversification within assets. So you said that you're in apartments, you have some commercial properties. What other kind of assets do you guys offer to your investors?
Sure. So, over half of our portfolio is multifamily value add. So that's definitely our core asset is the value add space in multi. And I feel like that's an ongoing asset class. There's always apartments that are old and tired that if you could put in, new kitchens, new baths, new flooring, you could raise rents a few $100s a month. There's always apartments that need to be repositioned. We like self-storage. We're in a self-storage fund. It's very similar. There's a lot of mom and pop owned storage facilities. There's often efficiencies, whether it's adding climate control, whether it's even building another base of storage on the same land. There's often extra land there. Some of the sponsors will include U-Haul trucks or other, ancillary businesses. Mobile home parks are a great asset class. We've done a little bit of student housing. We did student housing in 2021. It was sort of coming off of COVID still. And, we got into 2 great student housing deals in the Southeast, schools that have big football programs that,
hey, let's go SEC
down. Yeah. We've also done a senior housing ground up development, RV park and marina. I've personally done the ATM machines just with a small amount of money. We don't do that as part of our fund at this point, but there's a lot of, I feel like there's a lot of others kind of doing the same thing. And then light industrial. I love the small light industrial with, think about the type of building a heating and air conditioning contractor or a roofer may
like flex space.
You need some garage doors, and you need some warehouse space, and maybe you need a small office just for accounts payable, receivable. But primarily it's the storage and the ability to pull in your trucks and load supplies. Like almost every market we've looked at, the occupancy on those is mid 90s, upper 90s. There's often a wait list, and there's a high demand for that. That's I think another evergreen asset class, especially in the era of, Amazon and more fulfillment and more things happening remotely. And, with that said, there's a demand for the trades. Anybody who's, roofer, heating, air conditioning, like there's such a shortage of labor in that space that like all those guys are super busy.
Yeah. I mean, you got 600 square foot office space up front, 2,000 square feet of, warehouse in the back, and you got 10 of them in a big row. I mean, it's a really good,
Exactly.
really
The
good
rest of
plan.
the office market, I'd probably running away from
Yeah.
unless it's really, really cheap.
Yeah.
I think those light industrial flex spaces are a great great asset class as well. I think I covered them all. We do a little bit in the we have a hard money fund on our platform as well. So some of our investors want that current cash flow, just want to be in the debt side of things. So we've seen a few of those opportunities we have available, and
Yeah.
we're constantly looking, but I think I've covered most of the typical asset classes.
Have you looked into oil and gas at all?
Oh yeah, great question. So we don't do it formally through our fund, but I've got a great oil and gas group that's in my my network and my mastermind,
Mm-hmm.
because I have a number of clients that are hiring W-2, and as much as real estate's an amazing asset class, the depreciation for real estate in most cases does not offset active income or W-2 income,
Right.
unless you're in a very specific situation where maybe perhaps your spouse qualifies as a real estate professional.
Right.
But oil and gas can offset W-2 and active income. And the group I work with, they have a unique model that they're not the actual driller themselves. They track when one of the big billion-dollar companies is drilling, and they pick up the leases of mineral rights in the area, and that legally entitles them to participate in the working interest. So they've never had a dry hole, and a dry hole is when you don't strike oil.
Yeah.
And that's the biggest risk I found of oil and gas was, you invest money in a deal, they don't get oil, you lose your money.
Yeah.
They have a pretty good system, and the way it works out is you get about 40 cents of every dollar invested off of your taxes. And
Yeah.
so we're in towards the end of 2023. An investment even very late in the year can save you 40,000 on your taxes. So you can theoretically put 100,000 in, and come April 15th, or if you file earlier, you can get a $40,000 refund on your taxes on what you would have paid otherwise.
I know it. And, our cost segregation reports and all this, that, and the other that we do in real estate, it just doesn't even hardly hold a candle to the tax benefits in oil and gas, which is, I'm pretty sure, what's next here. Yep. Tax efficiency and regulatory compliance. Talk a little bit about where you live and why you live there.
Yeah, so I actually moved to Puerto Rico almost 5 years ago. When I left my firm in New York, I moved down. There's a number of amazing tax incentives in Puerto Rico. One is the Export Services Act, where that's why a lot of fund managers, consultants, internet marketing companies, pretty much, I mean, a majority of businesses qualify. The key is, are you making money from outside of Puerto Rico and bringing it to Puerto Rico? And so we manage our family of real estate funds from Puerto Rico, and that qualifies, as a fund manager. And Puerto Rican residents do not pay federal income tax. Now, a typical, say, a Puerto Rican attorney, the tax rate is typically 33% in Puerto Rico, so there was never really a benefit of moving there. However, the population was declining, and so the government of the territory of Puerto Rico created some of these incentives to recruit business owners to move to the island, create jobs, but also spend money, buy houses, employ accountants, spend money in restaurants, and so it's been great for the island. There's I think a majority of people are in favor of it. There's there's always a small vocal minority of people who are complaining that the gringos are moving to the island and making everything more expensive. But largely it's been a very friendly place. I've made a ton of friends and contacts, and there's thousands of other business owners who've moved there too. So for me, it's been like joining another mastermind or country club. But in this one, I'm saving 90% of my tax as opposed to paying. So obviously not everybody has the wherewithal to move to Puerto Rico, but it's just part of this journey for me. I've really dove into taxes. And while I'm not a CPA or an official advisor by any means, I look at my own investors and community as our own mastermind, and I love to talk through ways that investors can maximize their efficiencies in the States. That could range from real estate professional status, to if your spouse can qualify for real estate professional status, to setting up a solo 401k if you're self-employed. If you used to have a W-2 and you have a large regular IRA or Roth, there's options to convert. Well, the regular IRA, you can convert to a SEP, but you could also then convert it to a solo 401k, which is really efficient for real estate investing because it avoids some of the taxes like UBIT. Things like life insurance, where a lot of the whole life, I think, are scams, where the agents make a huge commission year one, but there's select agents in our network that they actually make very minimal commissions. And because of that, you can borrow back 95% of your money immediately. So it's that infinite banking concept. So it's important, in these communities we're in, there's tons of, half the barrier is finding the right person to talk to and getting into the right network. And once
100%. Are you utilizing the whole life insurance policies?
I'm not, just because I look at the math a little differently in Puerto Rico. I have so much that's already growing and compounding tax-free that, I just haven't jumped in yet. I also kind of want to lose 50 pounds first and probably get into a better class.
Yeah. No, I get it. I have somebody else that we're going to do a webinar with here in a couple of weeks on the infinite banking thing, and it's very interesting, man. It really is. We have a lot of common friendships with people that use it, and here in the States, and they do very well with it. On saving on their taxes, which is, that's our largest lifetime expense, is like, outside of, our kids, is, paying taxes, man. We pay so much in taxes every year. It's ridiculous.
Yeah. Over 50% in New York and California, it cracks 50%, and you have high cost of living as well. So, I was in that spot where, it's like you think you're doing well, you're making close to 7 figures, and by the end of the day, when you lose half of it and have an expensive rent and everything else is expensive, you're down to, you're not really moving the needle. However, if structured properly, you can really, save hundreds of thousands in taxes. And if you compound that over, 10 to 20 years, if you're 10 years to retirement or you've got 20 years left, we're talking millions of dollars just by, choosing the right investments, choosing the right structure, getting the right information so that you can, move forward and just be as efficient as you possibly can, and more money in your pocket, less money in the government's pocket.
Yeah, for sure. Now, we have a slew of investors that invest through a self-directed IRA. We don't have any that invest really with a solo 401k though. And we have somebody that we direct them to that handles their self-directed IRAs. But what's the difference between the solo 401k and the self-directed IRA?
Sure. So again, I know enough to be dangerous here. So I'll say consult with your professionals afterwards. But
exactly.
The solo 401k, you just need to be, and it doesn't need to be a full-time business. If you're generating $1 of self-employment income, you could open a solo 401k. So I think the most powerful aspect of it is, let's say someone built up a $500,000 401k, worked at a job for 10, 15 years. Now, maybe they're going to take a new job in 6 months. Maybe they're going to just be self-employed going forward. But the moment you have that account, you can roll over, or maybe you already rolled it over to TD Ameritrade or somewhere else, or any of the self-directed custodians. The power of the solo 401 is it's a checkbook. It's a checkbook IRA. You can open a bank account. You can open a brokerage account, and you have full control because you have control as like an administrator of the plan. And there's some tax efficiencies there as well. So, if you're investing into, say a multifamily deal or something where it has leverage, it's way more efficient to just use the solo 401 rather than just a self-directed. And you have a little more control, and there are some tax efficiencies. And then you also could crunch the numbers on doing what I believe is called like the step ladder, where let's say you're close to retirement, or you're trying to go full time in real estate, so you're showing losses. you might want to convert that at 12%, pay a 12% tax on it to convert to a Roth on a solo 401, and then your earnings are tax-free forever. So that's a whole complicated math calculation on, what are your minimum distributions going to be if you leave it in a self-directed IRA versus converting. So I mean that's the high level. I think that's like someone's looking at $500,000 to $1 million account or more. I mean there's a lot that goes into it. I worked with a group like solo401.k.com. I think the Norris group that I've talked to in the past, and they'd be a great person to interview as well. I think we're going to have them on one of my shows in the future too.
Nice. Yeah, I'll have to get their contact on you. All right, buddy. Jack, I appreciate it, man. You're off in Medellin, Colombia right now, and then you're headed to where?
I'm going to be in Panama for the weekend. I'm meeting one of my consultants that lives down here, does some of our social media work, and then I'm flying for Rob's thing. What's great about real estate is it provides the ability. And you and I were just in New Orleans for the weekend. I mean, when structured right, it provides that flexible lifestyle that I think everyone is seeking with growing our funds for retirement as well.
Yeah, man, had a damn good time with you in NOLA too, buddy. That was fun.
too good of a time for needed a couple days of rest, but that's part of the fun.
Yeah, we had a little brain pain a couple of days, but it was fun.
That's where some of the best business networking happens, though.
That's right. Listen, that's where the deals are done, man, for sure. All right, buddy. Let me see here. What else we got? Here's Jack's contact info here. If you'd like to contact him, is there any other thing you want to add?
I'm sure. I mean, the Alternative Investor Mastermind is our podcast. So for those that like podcasts, check it out on iTunes, Spotify, and we have a Facebook group as well. And Charlie, I want to have you on the show at some point as well. We'll do a pod on my podcast in the future.
Yeah. Krupey, send me those links, man, and we'll send it out in the email to everybody that's going to get this and make sure they get all that information. All right, guys, gals, thank you very much. You guys have a good one. Thanks, Jack.
Thank you.